dealer spread right there. So inside the 20-tick dealer spread, this is based on obviously an idea, an understanding of what the volatility is in this trade, right? So we do 60 offer, 40 bid, 40 bid at 60, 40 bid at 60 here. But what happens if somebody comes in and sells here? What happens if we get an offer at 50? Well, if we get an offer at 50, of course, the bid is going to be where? The bid is going to move down to 30, isn't it? So we get that idea that we're going to move a bid to 30, agreed? So we obviously have that kind of process there. Now, what happens alternatively? What if we get that same bid offer spread developing here? We go 60 offered. So we're 40 bid, 60 offered, 40 bid, 60 offered. We hit the 40 and we drive. Well, the bid's not likely to be 30 anymore, is it? If we drive straight off the 60 without even pausing, the bid is unlikely to be 30. So what does 30 become? 30 becomes a rag, right? So we go ag at 30. And we're going to go bid at 20, aren't we? So we're going to end up with a bid down here at 20s. So it all depends upon how the volatility evolves, doesn't it? Because this is all based on how the volatility evolves. You know, so if we get a pullback here, we're expecting this. If we don't get any type of idea there, then of course we would expect it to ag at 30, but the bid is actually going to be 20. So what's going to happen to the bid offer spread? We're going to go offered here, and we're going to go bid here, right? So we're going to go 20 bid at 40 on this one, and we're going to go 30 bid at 50, right? On that one, simply because that's how the volatility has evolved. Does that make sense to everybody? So yeah, we still get an ag at the 30, but we're expecting the bid at 20. So that's kind of what I'm thinking about that oil, because when we saw that drive on oil coming clean through that 74 kind of 40 area, and you're starting to build out your market based on that narrative of 73.50, 60s to 74.40. So it's about an 80 tick range, isn't it? It's about a 70, 80 tick range. So obviously if we go 74.40s and we go 70 ticks, that takes us to 75 wholesale, right? So 75 wholesale, and we're talking about a 70 to 80 tick range. Well, that would mean if I go bid at 75, well, that's going to take me to an ag around about the 50 mark, because that's the nearest wholesale, because there's no other prices in that area. So that means I'm probably going to see about 75, 80, because it's really not paused around these prices. It's really done this kind of directional drive, which is what we expected from the value line in the first place. I did shout this out at today's cash open. I said, be very careful not to sell into this, because we're seeing a very strong crack spread bid on an uprising oil market, which is obviously one of those unusual short-term conditions. But obviously it kind of gives us almost a feeling of a kind of almost a black swan type event when you get oil bid on a crack spread bid, because that's, you know, it's got a negative correlation on most rotations, right? In a normal bid offer spread market, put it this way, if we were in a normal bid offer spread market, what would the crack spread do in a normal bid offer spread market? Let's be honest about how we would see this. Okay, so we've got a bid offer spread here at 40.60, and I look at the crack spread, and the crack spread is doing this, right? So the crack spread does this, and the crack spread does this, and the crack spread does this, right? So if I'm looking at that, and I'm looking at the relationship of that spread to my oil price, what's the oil doing? Probably the oil price is coming up here, the oil price is doing that, the oil price is doing that, and that's how the oil price is behaving, right? So we're getting that idea that the crack spread is simply just rotating around because oil prices are going up and down. So if I started to look at that spread and I started to ask a very, very simple question, what am I expecting here when I see this spread developing? And I look at the crack spread in the background. Okay, so now I'm trying to get a sense of what the crack spread's doing to know whether this bid is going to hold here. And I see the crack spread, even in this rally, the crack spread was going up. And even when the price dropped like this, the crack spread was still able to hold a bid. Well, what I'm now thinking about here is that I think this is a very, very strong buy, and I don't think there's going to be anything in and around this area here. I think this market's gone north, which if you remember a while ago, you might remember I had a little conversation about this. I said to everybody, look, this crack spread is going bid against any upside in the oil. This is a very bullish marketplace. So don't try and just get heavy into any short trades, right? Simon remembers I said it. So that's good news. I did say it. I mean, it's pretty obvious I'd have said it when I've mentioned if I didn't say it. But anyway, that's the storyline of oil. And since then, we've obviously done exactly that. We just stuck around. We bought some more at 74.70s. And we've obviously managed to take it up to 75.50s. We've made a fortune on oil today. Absolute fortune. But when the crack spread starts selling when the oil goes up, then that firms up the level. Yeah. That gives us that idea that the level is starting to firm up around a price point. And if it's starting to firm up around a price point, guess what? That offer is going to stick. So this is what we started to see in here. Look, we started to see that narrative. So into this price level, initially at 75 evens, look, the crack spread went flat. See that, how the crack spread came down? But when we saw the crack spread rising, when the price rallied there, see that? And when we saw the price started to rally here and the crack spread was still upticking here, I knew that this price was going up to the next aggregation point. But look at what's happening just now. Remember, I just mentioned that we might bring the crack spread sell, the dealer sell from 80 down to 50. And the reason why I said that was because we're coming into 4 o'clock. I'm now seeing the crack spread coming off, but I'm not seeing it on the basis of an uptick in oil prices. This is starting to get bearish at a lower price. Obviously, if I was able to get 75.80 offered, I would be very, very keen, but I don't know if it's going to even get that far anymore at this stage. I think there's a chance that the dealers are now starting to bring their offers down into that 50, 60 area, and they're going to try and work this off this now for a short sell. What do you think of that? Any oil traders got an opinion? Because obviously, if you've got an opinion on it, you might well be short selling it already. You might already be in that bit of business, trying to get a little bit of action on there, right? You might already be all over this bad boy. So, if you are, good. Now, obviously, the same thing applies, the same rules apply. You know, you still check out your other bits and pieces. You still look for those other elements on your charts. You're not just simply held hostage by a bit of business there. You're not held hostage by it, right?